Shriram Transport Finance has informed exchanges that the corporate guarantee worth 650 crores that they had given towards bond issued by SVL Limited has now been terminated with immediate effect. What that means is that it will no more reflect as a contingent liability on the books of Shriram Transport Finance. We're in conversation with Mr. Umesh Revankar, the MD and CEO at Shriram Transport Finance, to get more clarity on the issue. Thank you for joining us, sir. I just wanted to understand what has led to the termination of this corporate guarantee. Has the Shriram Group repaid the bonds before time, or has the group assumed Shriram Transport Finance's guarantee?
The promoter group has purchased the NCD from the market, from the investors. So the guarantee then gets terminated automatically.
With this, you will have zero exposure to SVL Limited now.
Yes, we have zero exposure to SVL.
All right. So just trying to understand what has led to Shriram Group repaying these NCDs ahead of schedule, because they were due only in June 2019.
Yeah. There were our STFC shareholders, investors were a little anxious that this has to be because of SVL's financial status, that this need to be addressed immediately. So our founder had given assurance that promoter group will take the responsibility. And we felt that instead of waiting till the year end, it is better to get addressed now. So accordingly, it is done.
Sure. Sir, there's also a belief that the funding of this corporate guarantee by the group can lead to some corporate action in Shriram Transport Finance and Shriram City Union Finance.
No, there is no link with that, because promoter group has its own resources and they have raised resources with its own capabilities and done it. So there's no bearing on STFC and SCUF.
Sir, a recent report from Bloomberg has said that KKR and Blackstone Group are among suitors which have expressed some interest for acquiring stake in the Shriram Group, and this would require holding company Shriram Capital to first finalize plans for a three-way merger with Shriram Transport and Shriram City Union Finance. I just wanted to understand what's the progress on the preliminary talks on merger that you were having with Shriram City Union Finance, and have you heard on this aspect with the promoter group of Shriram Capital at all?
No, there is no truth in this report, because there's nothing we have discussed recently on this subject. So this report can be, you can dismiss it totally. But however, the discussion on a merger is something which is on for quite a long time. It's a more of an internal discussion, trying to figure out what are the advantages to the investors in the long run. Because if we are able to get good synergies among all the group companies and get better value for the investor, then we will take it forward.
All right. So you've recently informed exchanges with respect to fundraising. So what are the various fundraising options that you're considering, and what kind of funds are you looking to raise? Fund
resources, we have plenty options, retail and wholesale. So it is a normal course of action. There's nothing special about it. And recently we raised ECB for around $350 million we raised. And we can raise up to $750 million in a year. And similarly, you have retail NCD, which public issue we came with 1,000 crores option, and we raised 3,400 crores a couple of months back. So there are continuous fundraising activity, because we are ongoing concern, and demand for the vehicles are pretty good. And since demand is good, we felt we should keep raising more resources to fund that. And the demand situation across the country seems to be very positive.
All right. So a lot has been said recently on NBFCs and the current tight liquidity conditions, which is expected to lead to some sort of pressure on growth and margins as well, at least over the next 2 quarters or so. So what is the kind of moderation in growth that you expect to see at Shriram Transport?
We had given a guidance of 18 to 20% in the beginning of the year. And that may come down to around 15 to 18. So there will be a marginal growth decline if the current scenario continues for a long time. But if it is a short term, for another week or 15 days, if it gets normalized, I don't see any changes.
Okay. So what is the incremental cost of borrowing likely to be for you? And again, what kind of impact is it likely to have on the margins? Or is it that you will be able to pass on the entire increase in the cost of funds?
We should be able to pass it on because, see, we are lending to retail and used vehicle and rural market. So I don't see challenge in passing it on. But sometimes viability of the customer also we need to see. So we have already increased our lending rate by 100 basis points across all segments. So further increase, we will wait and watch the market scenario. If the market improves, because as of now, our customers are able to pass it on the increase in fuel price to the customer. So if we increase the interest rate also, whether they'll be able to pass it on, that we need to see. So the market is always a fluid situation. As of now, I can say that we can protect our margins.
Right. So, but what is the incremental cost of borrowing looking like right now?
It looks like around 100 basis points, and maybe it may go further. And it all depends upon the liquidity situation. Right now, banks and mutual funds are a little shying away, slowing down. But if they're able to overcome that, then probably I don't see further increase. So 100 is there for now, and maybe this may sustain for a long time, and after that it may come down.
Right. So, but where does your capital adequacy stand at? And I'm trying to ask this because, this clearly may not be the best of times to go and raise funds, especially from the markets. Why this current timing of looking at fundraising?
No, we are not really waiting to raise any equity now. Because our Tier 1 is at 14.2, overall CRAR is 16.5. We are much above the statutory requirement. So we don't have to take any increase in capital now. Maybe next year or end of this year, we can look at raising some. If the demand is good, market demand is good, then we need to raise.
Right, and just so the last question before we can let you go, has the second quarter, that is the July to September quarter, turned out to be as per your expectations when it comes to asset quality behavior?
Yeah, asset quality wise, it's quite good. It is as per the expectation.
All right, so thank you very much for speaking with Bloomberg Quint. That was the management of Shriram Transport Finance. Thanks for watching.